Let's bring back Gene Munster of Deepwater Asset Management for more on Tesla. We just had the headline about robotaxi, Gene, and also there's another one saying that they expect Roadster production to start next year. What do you make of all this?
Well, I make of it, Melissa, is I think that the stock has continued to slip in the after hours as soon as Elon kind of wrapped up his first 10 minutes of comments. And I think investors were hoping for him to say something more optimistic. You mentioned a couple things there, but that doesn't really change the trajectory. That still the substance of the excitement of the story is probably a year plus away. And so I think all of those are good around just check the boxes, but those boxes don't start getting checked for some time. And I think that's probably why we continue to see a little bit of slippage in the stock.
Why do you think all of a sudden investors really care about a timeline, Gene? I mean, I feel like, we've been thinking about robotaxi a year out, and all of a sudden a year out now is problematic.
Well, it's problematic in the context of what we saw with margins. And since those margins dipped, they did generate more cash. Cash inched up to $31 billion. So they got plenty of cash. But once you start to stress the margins a little bit, it causes investors to want to see more in terms of when this next thing is going to start to hit. And so I think that's kind of elevated some of the anxiety around timing. I'm still in the camp that they're going to deliver on these. They won't deliver it on time, but ultimately no other car company is doing what Tesla's doing, and I think this is still going to move higher.
Hey, Gene, if the bet that Elon made on price elasticity has been very wrong for 18 months, why would you start making new cars? Because I have to assume that that ramp is only putting more pressure on margins.
Well, two things. They're going to be reorienting their manufacturing process. They talked about this last quarter, so that these new car models, probably two of the three, I think there'll be three, will be essentially a tweak. So I don't think that there's going to be a step down. They said that they'll be able to build cars more efficiently. And so the price elasticity piece, just a quick a note on that, is over the past few quarters, the ASPs have gone from about 46,000 to 43,000. They have gone down, but it hasn't been a dramatic drop. And of course, one of these new products is going to be probably around $25,000. And so I think that the true test of price elasticity hasn't hit.
Gene, so basically you're holding on to the stock for what's going to happen maybe 2 years down the line. I'm just wondering how you think about that in terms of holding on to something that could very well be sort of dead money when you see so many other opportunities. You think of AI as sort of a once-in-a-generation opportunity. I mean, there are other places to put that money.
Indeed, there are other places, but there is no company like Tesla that ultimately is trying to solve these complex problems. I know that other car companies are teasing around the edges, but this company is all in. Call it whatever the market cap is, sub $1 trillion today. You think about the opportunity, what they're doing around automation, around FSD, fleets, even what could potentially come out from Optimus. I'm not hanging my hand on Optimus, but Melissa, I think when you think about that, that opportunity sets in front of them, and you think about that there are other companies that are $3 trillion market caps, I think Tesla can be in that league. I know today is not the day to be thinking about this with these ugly margins, but I think that the company is firmly on track with where the world is going, and I think that that's the reason to, in my opinion, that's why I'm holding my shares.